Good morning, bulls and bears, and welcome to today's morning market outlook. I'll be discussing the US dollar index, crude oil, spot gold, as well as the Australian dollar against the US dollar. So the US dollar index edged 0.09% lower at the start of the week, with weakness against the yen as markets prepare for a heavy week of central bank decisions and key US economic data. The recent decline reflects a dovish market interpretation of the latest FOMC guidance, while the Fed's dot plot still points to just one rate cut in 2026. Markets have largely dismissed this and are pricing in 225 basis point cuts, highlighting a clear policy expectation gap. Technically, the dollar remains under pressure after failing to stay above 100 in November. Momentum indicators continue to favor the downside with RSI around 35 and ADX above 20, suggesting the downtrend is strengthening. Key support sits at 98.13 with downside risk towards 98.03 and 97.46, while resistance remains near 98.79 and 99. When it comes to crude oil, we can clearly see it fell more than 2% to around $55.10 per barrel, and that's the lowest since April, and extending year to date losses to roughly 22%, which is the worst annual performance since 2018. Expectations of easing supply constraints linked to progress in the Ukraine conflict, combined with persistent oversupply and weak Chinese demand signals, continue to weigh on prices. From a technical perspective, crude oil remains in a weak, range bound structure with lower rebound highs and no clear reversal pattern. Resistance is concentrated near 58.46 and $60, while key support levels are seen at 54.78 and $54. After analyzing spot gold, we can clearly see that it traded near $4,300 per ounce, giving back earlier gains as safe haven demand cooled and profit taking emerged. Prices briefly approached $4,350 per ounce, but optimism around progress in US Ukraine discussions reduced geopolitical risk premiums. Despite near term consolidation, gold remains technically supported above $4,236 per ounce, with bullish moving averages in place. Resistance is focused on $4,350 and record high at $4,381, while support remains at 4,300, followed by 4,248 and 4,200. Lastly, the Australian dollar eased to around 0.6630, extending its losing streak to four sessions as weak consumer confidence and softer PMI data weighed on sentiment. Despite this, the pair continues to hold above 0.66 and remains supported by a rising 20-day moving average near 0.6570. Momentum remains constructive, with RSI near 60, keeping the broader bias tilted higher. Resistance sits near 0.6685 and 0.6707, while a sustained break below the rising moving average could open the door to a deeper pullback towards 0.65. This has been BCR's morning market analysis. Thank you for tuning in and have a great trading day ahead.